Monday the 6th of June, European stocks head higher, every single sector in positive territory, bar one. Politics front and centre here in London. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So here's the price action, 30 minutes to the close. European stocks are higher. We're up by 1.22%. Everything's up bar healthcare. This is a front foot market. We're feeling positive about what is happening here. Miners are trading higher on China. Technology also getting a lift. The pound is also higher. 9 p.m. tonight here in London, we're going to find out the results of a leadership vote into Boris Johnson. Can he proceed? Will he be ousted? We will find out a little bit later on. The pound is taking this positively. It was a weekend, though, for watching what was happening with the Jubilee, but also watching for what was happening here in the UK at airports. Scenes of chaos certainly being reflected today in share prices of some of the companies, particularly the low-cost carriers. EasyJet, for instance, down by 1.6%, Alex.
Well, here, Guy, is really higher stocks and also higher yields, something that you may not see very often because this time tech is doing quite well. NASDAQ 100 up by 1.8%. Now, a large part of that is due to Amazon with its 20-for-1 stock split taking effect today, Monday, so it's a little cheaper. So, therefore, some retail investors can probably get into the market. That helping to propel equities higher. Now, on the yield side, I mean, an 8 basis point move is quite chunky, and there didn't seem to be potentially any catalyst for that. The rhetoric, of course, is can the Fed actually engineer a soft landing and continue to hike and not destroy the economy? That could be good for both equities and for higher yields. Now, one other thing that's quite interesting here, take a look at dollar yen, and this is on a closing basis. We're at a 20-year high for dollar yen. I'm just going to leave that right there. And this comes as Microsoft on Friday warned, of course, of an FX impact into earnings. We heard it from Oracle as well. That strong dollar and earnings revisions will be front and center in the next few weeks as well.
Absolutely. Front and center right now here in the UK. Alex, Prime Minister Boris Johnson, he's fighting for his job. Republican members of his Conservative Party have forced a confidence vote. That will take place later today. This, of course, comes after a series of scandals. Senior Conservative MP, the head of the 1922 committee which runs this process, Graham Brady, spoke earlier today.
I notified the Prime Minister yesterday that the threshold had been reached and we agreed the timetable for a confidence vote to take place and he shared my view, which is also in line with the rules that we have in place, that that vote should happen as soon as could reasonably take place, and that would be today.
Better it were done quickly. 6 to 8 p.m., 9 p.m. we get the result. Right now, the Prime Minister is addressing rank-and-file Tory MPs, backbenchers, members of his government, to try and make his case for why he should continue. Joining us now from Westminster, Joe Mays, Bloomberg's UK government reporter. He is at 10 Downing Street. Joe, what do we know in terms of the nose count? How close could it be?
It could be very close indeed. And if you look at the number of Conservative MPs who've come out and publicly backed him today, the number is only nearly approaching 100, and that's a lot less than Theresa May had when she faced the last confidence vote in the Conservative Party back in 2018. So on that simple public metric, this could be a very close vote. And even if the Prime Minister were to win and get over that 180 mark, there'd still be a big question about his authority in the party, whether he could plausibly lead this party in the future if the number of rebels is very high, say over 100, 120, 130. That would be very damaging for his position. And we're entering a very uncertain period now in British politics.
Joe, what are the MPs so mad about that they would go as far to vote against its own Prime Minister?
It's a mix of many things. It's the aftermath of the Partygate scandal, Johnson being fined for those illegal gatherings in Downing Street during the pandemic. It's also a succession of very bad poll ratings recently showing that if there were to be a general election today, the Labour Party would win the overwhelming majority of battleground seats. That's a big problem. There's also questions about Johnson's character, integrity, whether he lied to Parliament over the Partygate saga. There's just so many, all these things that come together, and finally kind of the straw that broke the camel's back came Monday morning. We crossed that 15% threshold, and now we're into this confidence vote, and Johnson's in trouble.
Joe, we appreciate it.
Joe,
You and me, you can go.
It's okay.
All right.
I'm very happy to thank Joe. You can thank Joe. Carry on.
Joe, thanks. Bloomberg's Joe Mays joining us there. We're both so excited. Thank you. All right, joining us now for more on the vote of no confidence is John Curtis, a professor of politics at the University of Strathclyde. Professor, thank you so much for joining us.
You're welcome.
By your account, how close could the vote be?
Well, I think certainly one way of looking at it is that if the more than 100 Conservative MPs vote against Mr. Johnson, that will be relatively bad news. If it starts heading north beyond 120, then that will be an indication that probably his position inside the party is weaker than that of Theresa May. When she was challenged by a similar procedure back in December 2019. Now, I think so far as voters are concerned, they've not learnt anything new in the last 24 hours they didn't know already. And indeed, a couple of instant polls that we've had asking whether or not the Prime Minister should resign, while they're getting roughly the same numbers that they were getting a week ago, or indeed, frankly, 6 months ago, which is that around 3/5 of all voters think that he should go. So it's not necessarily going to damage the Prime Minister's reputation with the public, because frankly, that damage has long since been done. The question will be, is that if indeed Tory MPs see a Prime Minister that many of their colleagues no longer have confidence in, to what extent will they be willing in future to back the Prime Minister when it comes to some of the more difficult and contentious issues that the government is facing inside the House of Commons?
Professor, when you talk about not having confidence in the Prime Minister, can we just drill down into that a little bit? Is this a group of MPs that is no longer confident that Boris Johnson can win them the next election?
It's a mixture, to be honest. In part, yes, it is to do with politics. It's to do with the damage to the party's current poll rating, and perhaps more seriously, the fact that basically around 3/4 or so of voters just do not think that Mr. Johnson's been telling the truth over the Partygate affair, that they therefore are concerned that, well, even if the Prime Minister does do well on the cost of living crisis, does do well on Ukraine, does help to deliver a successful Brexit, that voters will no longer believe him, and that therefore he's not capable of turning it around. So that's part of what's going on. The other side that's going on is, I think, much more ethical. I think there are some Conservative MPs who are just saying to themselves, having read the Sue Gray report, having had time to think about it, and yes, also having heard about what some of their voters think about it, are saying, you know what, up with this no longer am I willing to put. I just don't feel able to defend what the Prime Minister has done on Bloomberg television, on the BBC or any other channel. And that therefore, given that that's the conclusion they have come to, their degree of unease has reached one that kind of irrespective of whether they are pro or Brexit or reluctant about Brexit, on the left of the party or on the right of the party, they're now saying, well, hang on, I think perhaps the Prime Minister should go.
Professor, let's just say that in some way he does go, whether by the vote or resigns later or his mandate to govern is then shifted. Who's a likely successor, and do they avoid the issues that Boris Johnson has stepped into?
The answer is there isn't a likely successor. In a sense, the one good thing that happened to Boris Johnson over the last 6 months was the fact that Rishi Sunak, his Chancellor, was also fined for a breach of the lockdown regulations. And at the same time got into trouble over the fact we discovered that his wife is and therefore not paying full UK tax, and also indeed that the Chancellor had a US green card until relatively recently. That resulted in a severe decline in the popularity of the Chancellor, who hitherto was clearly the person that voters in general and Conservatives in particular thought was the...
I think we may have lost Professor Curtis, which is unfortunate. Full flow in terms of what he was saying about the possible successor to Boris Johnson were he to lose that vote. We've certainly seen Jeremy Hunt, the former health secretary, indicating that potentially he would step in, Alex, and throw his hat into the ring were that to happen. There are others. Clearly, the Foreign Secretary would be interested in the job. But Boris Johnson doesn't have, as the professor was saying, a clear and obvious successor. Professor Curtis, we understand that you are back with us. In terms of what will change as a result of this vote, Will, for instance, and I wonder whether the financial markets are pricing a little bit of this today, for instance, will the Prime Minister be able to do things like triggering Article 16, which potentially could be illegal as well? This whole issue of law breaking has become a major one for his government. Triggering Article 16 may sort of point us in that direction again. Would that be something that got taken off the table if Boris Johnson is successful today, but not that successful?
Yeah, there are a number of things I think one can point to where the government's potentially in difficulty. One is indeed over Article 16 and triggering that. A second one is the government's plans for deporting migrants to Rwanda, those who are trying to secure asylum. And the third also perhaps is the privatization of Channel 4. These are all things that cause controversy within the party, and they are all things in which the Prime Minister now may find it rather more difficult to deliver. So yes, we will certainly be looking politically at a weakened Prime Minister, a Prime Minister who will be at risk of finding that his party is more rebellious if they think that the path down which he is going is one that's going to cause them trouble in their own constituencies as well as the party trouble more generally.
Professor, at least here in the U.S., all anyone cares about is the cost of living increase. And it's very similar over in the U.K. Does this help or hurt the government's ability to truly fight that and help people dealing with much higher bills?
Well, you're right that the cost of living crisis is the issue that most concern voters so far as their futures are concerned. But you have to remember that Partygate is an important emotional issue. Most people know of the sacrifices that they had to make during the lockdown, sacrifices that apparently the Prime Minister himself was unwilling or unable to make. And that just gives this issue an emotional resonance that's way beyond the extent to which it's now an issue of direct concern to voters. But to that extent, at least, and the truth is at the end of the day, is that because voters don't believe the government on Partygate, they seem to be reluctant to give the government much credit for its handling of the cost of living crisis or anything else. So in the end, these two issues begin to interact with each other, because if you've got a Prime Minister who voters don't believe on one issue, it's then much more difficult to lead those voters, to persuade voters you're doing the best for them on another issue, an issue which, of course, yes, undoubtedly is above all the top concern of the voters at the moment.
Professor Curtis, thank you very much indeed for your time today. We greatly appreciate it. Professor John Curtis joining us from the University of Strathclyde. Coming up, that confidence vote is being held at a time when the UK is facing its worst squeeze on living standards since the 1950s, as Alex was talking about. We're going to talk to Jeremy Lawson, Chief Economist at Aberdeen, next, about the impact that this could all have on the British economy going forward. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
So, UK consumers didn't get a break from rising gasoline, we call it petrol, and diesel prices over the holiday weekend. Prices reaching record highs again. It's compounding, basically, the cost of living crisis in the UK. We're talking about it on both sides of the Atlantic. Joining us now, Jeremy Lawson, Aberdeen's chief economist. Jeremy, that's the issue. We've got a political story developing on one side, Boris Johnson's job at risk, yet the cost of living crisis is all around us at the moment. Even if Boris Johnson is replaced, it is unlikely that that cost of living crisis is going to disappear anytime soon. Were he to be replaced by somebody else, does anything change here?
I'm not sure it fundamentally changes. If you think about the things that are really driving the cost of living crisis, whether it be the war in Ukraine, whether it be an economy that in a labour market that's overheating, whether it be Brexit, none of the fundamental drivers are shifting, and whoever would replace Johnson, if that's what were to happen, wouldn't really have a mandate or an ability to really reshape those forces fundamentally.
I guess the other flip question is, what about the help that we've already seen, and that you have this windfall tax on oil and gas companies in order to then pay for low-income households dealing with higher energy bills, for example. Do you anticipate things like that either being expanded or off the table?
Well, look, they can't be ruled out because they were provided because there was a big political driver to be seen to be doing something to address the crisis. But here's the problem. Actually, those policies, while being really important for supporting households and reducing recession risk in the very short term, they're effectively pumping more demand into the economy. If anything, they're going to push inflation higher in the medium term, not lower. If anything, they're going to make the Bank of England's job more difficult, not simpler. So actually, they don't really reduce the chances of the UK experiencing a recession within the next 2 years, even if they reduce that likelihood within the next 6 months.
Do you think Boris Johnson... But to talk a little bit about the fiscal side, Boris Johnson has become a big spending prime minister in a way that very few Conservative MPs and prime ministers have in the past. Were he to leave and somebody else replace him, do you think that the Conservative Party, there is a risk that the Conservative Party reverts to type?
Well, it could do so. And actually, there was a way to provide support to households without widening the budget deficit, right? But it would have required sort of higher taxes or cuts to spending in other sort of areas which are also unpopular. I think it's also very difficult, the divide between blue wall and red wall seats. How do you straddle that divide? It's just a very difficult thing for the Conservatives to hold their current coalition together. Again, I don't think that anybody who might replace Johnson is necessarily going to find it easier to navigate those tensions.
So I guess a good question then is, at what point does political drama, dysfunction, whatever you want to label it as, affect the economy?
Well, I think it's already been affecting the economy, right? The rights or wrongs of Brexit, but the uncertainty around that for a number of years, the difficulty with predicting its course, even now with the question marks about whether Article 6 will be triggered, the future of the Northern Irish Protocol, it's hard to really settle these issues. So actually, I think uncertainty is a feature. It's not a bug. It's not going away anytime soon, and it will continue to be a constraint on businesses' willingness to invest and the long-term outlook for the economy.
One of the things, though, that has caused business some concern is that we could see even tighter tariffs being imposed, an effective trade war being imposed by the EU, were we to see the triggering of Article 16. If that risk is reduced, do we get more business investment?
Well, look, if it was to be reduced, I think the question we have to ask ourselves is, will it be reduced? Is it likely that an alternative prime minister is going to put less pressure on the European Union? Right? If this goes to a vote, right, this has to go to a vote of Conservative members. Right? And these drivers, the things that have been pushing the Conservatives towards this position on the Northern Irish Protocol, these aren't like fringe views within the party. This is sort of, a lot of people sort of agree with that course of action. So I'm not sure that the outlook for the Northern Irish Protocol improves meaningfully, perhaps if Hunt becomes Prime Minister, but it's going to be hard for him to be elected on the basis of a platform that goes easier on the EU.
You're a chief economist, so I have to sort of shift our focus for a moment to the ECB, because one of the main events is going to be the ECB on Thursday. It seems like getting out of negative rates by the end of the year feels like a doner deal than we might have thought. How fast and how do we get there then becomes the question. What are you thinking?
Yeah, look, we think that they're going to deliver 325 basis point interest rate increases to the deposit rate by the end of the year. So they'll take it into marginally positive territory. Obviously, it'll leave the ECB with a much lower policy rate than in the UK or the US and a number of other advanced economies. But that process of normalization is definitely about to begin.
Jeremy, I've got BTPs at 3.43 right now. What does fragmentation look like in terms of the yield that Italy is being charged?
Yeah, sure. Look, fragmentation is something that tends to push yields higher. But Europe has taken steps since the pandemic to increase integration, if anything. So actually, in some ways, I think that the risks of a European breakup are probably lower than at any point that have been in the last sort of 10 years. Of course, if there's a recession in Europe, that could put pressure on things again, and sort of spreads will continue to oscillate with political news. I think the fundamental sort of story is that Europe is more united rather than less so.
During the press conference, it feels like Christine Lagarde has to walk a really fine line, saying we don't target spreads, we don't target the euro, giving lip service to the hawks and the doves. Is she able to align market dynamics with what the bank is actually thinking?
Look, she can, but I think only if it turns out that a lot of the inflation in Europe is transitory, right? So European inflation is a bit different. Core inflation hasn't picked up as much there as it has in the UK, as it has in the United States. That does give the ECB an opportunity to take a more cautious stance and try and straddle these sort of particular perspectives. But again, if there's a more serious global downturn, Europe won't be immune from that, and spreads will react to it. So she's not really the master of her own destiny when it comes to that on a 6 to 12-month view.
Yeah, I'm sure she's quite aware of that unenviable position. So. Jeremy, thanks a lot. We very much appreciate it. Jeremy Lawson, Aberdeen chief economist, joining us. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Elon Musk has introduced another twist into the Twitter takeover saga. The world's richest person says he believes Twitter is breaching its merger agreement by not meeting his demands for more information about spam and fake accounts. Last month, Musk said he wouldn't go ahead with the $44 billion takeover unless Twitter can prove bots make up fewer than 5% of its users. And shares of China's ride-hailing giant Didi are soaring. According to the Wall Street Journal, Chinese regulators are preparing to wrap up their investigation of the company and restore its main apps to mobile stores. The report also says that Didi will face a relatively large fine. And India is looking to double down on its Russian oil imports. State-owned refiners are eager to buy more heavily discounted supplies from Rosneft. International players have been turning down dealings with Moscow over its invasion of Ukraine. And that is your latest Business Flash. Guy.
Ritika, thank you very much indeed. European markets are about to wrap up for the day, or at least equity markets will stop trading. Let me show you some numbers in terms of the main markets. Then we'll talk about some of the other things that are happening here. FTSE, DAX and CAC all in positive territory, all up by north of 1%. Slight variations in terms of composition here, obviously having a factor. Some of the UK airlines are under a little bit of pressure. The healthcare sector is the only sector in negative territory right now. We are seeing mining stocks doing well, which is helping London. Technology stocks are actually having a fairly good day as well. Some of the delivery companies are having a solid session, and as a result of which the DAX and the CAC both trading higher as well. But there's action elsewhere. We are seeing yields picking up really quite sharply, so bond prices being pushed lower. We're seeing that both over here in Europe and over in the United States. Keep an eye on that, and keep an eye on what is happening in the pound as well. We've talked a lot about British politics today. The future of Boris Johnson certainly having an effect there. The pound higher today. We are going to get the results at 9 p.m. London time as to whether or not Boris Johnson has passed or failed this particular test. Anyway, the close is coming up next. That's next. This is Bloomberg. Stocks finishing up the day this Monday here in Europe. Bright green, actually, across most of the screen. What we're watching here today is, to a certain extent, a little bit of holiday action, but some fairly positive stories developing in a number of areas. So you've got the FTSE 100 up by around 1.1%, the CAC up by 1.2%, the DAX in Germany up around 1.3%. Some of the peripheral markets are doing a little bit more. The session has looked a little bit like this. This is where we started, and this is where we're coming in to finish. A reasonably quiet first part of the day. US markets get into gear and we move up a gear, as you can see. A little bit of a sell-off over the last 10 to 15 minutes. If yields have started to track higher, you've got the US 10-year moving convincingly north of 3%. That started to have an effect on US markets, which is then translated back here in Europe. So we're trading around 444 spot 4, so all the fours. We're up by around circa 1% as we come in towards the close. Let's talk about another part of the action that we've been watching so carefully here today, and that's been what's going on with the pound. This is the point at which we get the announcement from Graham Brady that we are going to see a vote of no confidence, and it's going to get done relatively quickly. The result will be out at 9 o'clock this evening. But as you can see, two sort of legs higher for the pound before a little bit of a fade. We're trading 125.27, but it did have an effect. Be interesting at some point to kind of understand what that effect is. I wonder whether or not we could get a bigger effect a little bit later on. It'd be interesting to see exactly how close the vote is. If Boris Johnson doesn't win, definitely want to be keeping an eye on the pound a little bit later on in the day. You'll be well into US trading at that point. Sectors break down like this. Basic resources doing well on the back of China and the easing that we're seeing there. Technology's doing well on the back of China and the easing we're seeing there for the tech sector. Take a look at what is happening with Didi. Banks are up, cars are up, energy's up. The only sector that's not up today is healthcare, which is certainly acting as a little bit of a drag. But I want to talk a little bit about some of the airline stocks as well in a little bit of detail. EasyJet, Wizz, Ryanair. Ryanair is trading higher, but look at EasyJet and Wizz. So these are the ones I want to focus on in a little bit more detail. A lot of flights were cancelled over this weekend. A lot of people experiencing significant delays and stress at UK airports. People coming back to the UK experiencing significant problems as well. People leaving, missing flights. We understand, and I can't corroborate this with any degree of accuracy, but a lot of it was focused on EasyJet over the weekend. That stock down by around 2%. Wizz also tracking a little bit lower as well. So airline stocks, certainly, Alex, feeling the pressure. Those that stayed at home got to watch the Jubilee. Those that went abroad got to stand in line.
Yeah, I just opt for the car and just pay a lot in gasoline bills and also sit in traffic. So there's that. One of the stories we're watching out of the UK today is Paul Singer's firm is suing the London Metal Exchange. Elliott Investment Management is seeking $456 million in damages over the LME's decision back in March to cancel billions of dollars of nickel trades. Joining us now for more, Jonathan Browning, who's been covering the story. Jonathan, what's the case? What's Elliott claiming?
So this is a really big moment. We've been expecting lawsuits for a long time now. They've even been talked about by other investors. And then over the weekend, just before the bank holiday in the UK, Elliott Investment Management, one of the biggest and most activist investors out there, has filed its claim. It's seeking $450 million in damages. And this all derives from a time in March when the London Metal Exchange, a regulated exchange, cancelled billions of dollars worth of nickel trades after a massive short squeeze.
Jonathan, they had 3 months if they went down the judicial review route, which they did. Why are they going down that route rather than seeking another way of getting recompense?
So they're just within the deadline of filing the judicial review. The London Metal Exchange is a regulated investment exchange, which means that it can be held accountable like a government authority. And the LME itself has faced judicial review claims before. That's an accepted route by which litigation can be brought in London against an entity like the LME.
456 is a lot of money. Do we know whether others are going to pursue similar claims? And if so, how damaging could this be for the LME? How bad could it get, both financially and from a sort of market positioning point of view?
Ken Griffin of Citadel said expect lawsuits a couple of weeks ago at a Bloomberg conference. We are definitely expecting at least another lawsuit to come forward, potentially by the 3-month deadline. It's very damaging for the LME. It's faced a lot of criticism for the handling of the nickel crisis. It's also facing a review by both the Bank of England and the Financial Conduct Authority. Meanwhile, the nickel market itself is stuck in a period of limbo. There's low liquidity, low volatility.
Jonathan, great stuff. We look forward to further coverage. Jonathan Browning, thank you very much indeed, sir. OK, let's check where UK markets are. European stocks have settled. Not much action, but I think we probably have to wait for another couple of seconds before we get a final tick higher or lower. We will bring you that when it happens, but those are the numbers on the screen right now. We'll certainly carry on the coverage of what is happening, particularly from a political front here in the UK on the cable show. Alex and myself, 5 p.m. here in London, 12 p.m. in New York. You can find us on DAB Digital Radio in London. You can find us on all of your Bloomberg devices, and you can also find us a little bit later on the Spotify and iTunes area, the podcast area. You'll find us there. Alex.
Definitely looking forward to talking politics on that. Coming up here in the U.S., you have a conference on the future of mobility, and that's bringing billionaires and their aerial visions to Northwest Arkansas. We're going to take you from the latest there. This is Bloomberg.
This is Bloomberg Markets European Close. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Patrick Palfrey, the Credit Suisse Senior Equity Strategist, joining Bloomberg TV at 3:30 p.m. New York time. Don't miss it. This is Bloomberg.
The Up Summit is underway right now in Bentonville, Arkansas. Now, the event brings together global investors, executives, startups, and founders to discuss everything from battery electric planes to drone technology to EV batteries. So for more than $1 trillion of assets under management will be represented at the conference, 250 attendees from 30 countries. It's big. So joining us live from the summit now are Cyrus Sagari, Up Partners co-founder and managing director, and Stuart Walton, Runway Group co-founder and Walmart board member. And Bloomberg's Ed Ludlow is there on the ground. Ed?
Yeah, good morning, Alex. And it is big. We're coming off the 2-year hiatus from the pandemic. I am joined by Cyrus. I am joined by Stuart. Cyrus, I'll start with you. Lots of numbers there from Alex about the scale of this event. But what's the goal? What's the point of us all being here in Northwest Arkansas?
Well, at first, thanks for coming to Bentonville for this event. And really, our main purpose here is to bring together a community of investors, of technologists, of entrepreneurs, corporates, all with one mission. And that's to transform the moving world, to help move people and goods cleaner, faster, safer, lower cost, on the ground, in the air, the sea, and space.
Now, in the air, you guys, the audience should know, are pilots. You're able to fly a broad range of flights. We'll talk about who's the better pilot later. Stuart, this is your home, Bentonville, but it's known for Walmart, right?
Of course,
But you've got a different vision for Northwest Arkansas. You don't want this to be about the sort of legacy business. What's the future that you see for this region?
Look, I think the future for us is trying to make Bentonville just the best community it possibly can be, and that's the best version of itself as it already is today. We've got so many assets here and such a great culture, such a great community. We're trying to just add to that, amplify it, and drive it forward into the future. What we think that looks like is actually being innovative, doubling down on the best pitch that we got. One of those pitches that we have is about transportation and logistics. Right. You've got Walmart, you've got Tyson, you've got J.B. Hunt, all located here in Northwest Arkansas. We move more goods from this region than just about anywhere else in the world, probably. And we think the future of transportation, logistics, moving goods, moving people is going to be just critical to this region's success in the future, right, as well as to the country's. So we're just excited about it.
What's it going to take for us to get there? I know you, Cyrus, as a venture capitalist, you invest in a broad range of mobility-related startups, but do people actually meet in the corridors of Crystal Bridges Museum and say, hey, let's do a deal? You got executives, you got founders. Is this just fun, or is this a real place that business is being done?
Well, we're definitely going to have a lot of fun. That's certainly pretty important. However, just as an example, our last event that we did in Dallas, Texas, with Ross Perot Jr. as our co-host,
right,
we had about 30 companies present over a 2.5-day period, and that resulted in $500 million being invested into the entrepreneurs on stage.
Directly from that event?
From the people in the room. And that was 3 years ago. You know, lots changed around mobility and investment and excitement around mobility broadly. And so the event's grown, the people that are here have grown, and I think public desire for moving people and goods cleaner, faster, safer, and lower cost has only just gotten bigger. So I think we got a lot of tailwinds behind us there.
There's some interesting stuff around us here. We're at the local municipal airfield, essentially, but a special hangar. There's a big, shiny object behind us. What is that?
That's the Beta Technologies Alia, and it flew here from Vermont under its own steam, and its steam is actually, as you might guess, electric power.
We should clarify, it did stop along the way and charge.
It did. They strategically placed stations along the way. And you know, Kyle Clark, the founder of this company, has become a friend of mine. We share an interest in cycling as well as in aviation.
Right.
He's got an awesome company up there. They're doing great things, and we're excited about what their future looks like.
So if I can jump in real quick.
Jump in, right ahead.
It cost $18 worth of electricity to get it from Vermont to here.
Isn't that great?
18.
So
why is this not commonplace? You know, this is here physically with us, but to the public, to investors, these are abstract concepts. They're not deployed. They're not revenue generating.
Look, aviation is a complex business, and you're dealing with public safety, which means you're dealing with regulators, and you're going through a very thoughtful process to ensure that when the general public gets into one of these new flying machines, that they can do it with a high level of comfort and security. And I think not only Beta, but all the other folks that are here and that are developing technologies that are going to help people go up are going to be able to do it with a high level of confidence. And so it's going to take some time before the general public is getting these things, but I think we're going to see it in the not so distant future.
You know, one other thing I'd add to that is this conference sits at the intersection of two, I think, pretty interesting situations going on. Okay. One is dramatic increase in the technology around how things fly and what we can do to make them fly on different energies and longer and further and in new ways. Two, influx of capital. And as Cyrus talked about earlier, you just have a tremendous amount of capital coming into this space. So you got technology and innovation pushing one side, you got a tremendous influx of capital. This conference sits right at the core of that. And, you know, we're figuring out where the future is going to go, I think.
Hi, guys. This is Alex in New York. I just have a couple of questions. Cyrus, to picking up on Stuart's point, this is also all happening at a really challenging time globally. Markets, public and private, are quite volatile. We have banks like JP Morgan are talking to clients about how to protect for a recession. When you talk to companies right now, how is that all infecting, say, valuations, mergers, innovation? What do you see?
Yeah, well, no doubt there's a correction happening across the entire capital stack, from public markets down to early stage venture firms. I think what's really exciting is that humanity's desire to move cleaner, faster, safer, lower cost is not going to change. And so we are in the middle of a cycle, but I think the underlying thread of what's driving this is not going to go away anytime soon. So I think we're still going to continue to see a lot of entrepreneurial spirit around it. I think the capital markets are still going to be excited about, you know, this utopian future of flying cars and, you know, calling your autonomous robotaxi to pick you up. And we're excited to continue to see that all come together.
Stuart, it's a similar question to you, because before the pandemic, it was all about how robots are going to replace humans, right? And now humans have gotten expensive, but so have robots because of supply chain problems. How do you see that playing out in the areas that you invest in?
Yeah, I don't think humans are going to replace robots. I think humans will do different things in the future, and robots will take away some of the jobs that humans generally don't like to do, and you have to pay people to do. And so I think that's a trend that's going to continue. I think the pandemic in many ways accelerated it. And, you know, in terms of like the right time to invest, who's to say today isn't the perfect time to invest? Right. It's a bit of a guessing game, and I'm not smart enough to figure that out.
But there's also like an element of future-proofing, right? You know, delivery became massive during the pandemic era. Walmart, you sit on the board of Walmart. How does technology change that? Delivery is expensive. You had Walmart, Amazon, Target trying to compete for consumer loyalty, but at a cost. What are the technologies that can make delivery faster, but also impact the bottom line?
So, Ed, I'd tell you, delivery is expensive today.
Okay.
But there are lines of sight, pretty clear lines of sight, to reducing the cost of last mile delivery, one of which is through a drone. And if you think about getting in your car, 5,000-pound vehicle, driving a non-direct route to a Walmart store, picking up Hamburger Helper, driving back to your house, you know, that's a 20, 30-minute journey, even if you live really close. And if you flip that around and say, hey, drone, deliver that to my backyard or my front porch, that's a 2-pound drone, a 5-pound drone.
But when is that real? When does that happen in our lives?
That's real today. That's happening here in Bentonville, Arkansas, over our heads actually at the moment. So the future's here, it's just not evenly distributed. And one of the places it is distributed is right here in Bentonville, Arkansas, which again is kind of why we're having the summit.
Let me ask you both very quickly, one by one, who are you most interested to meet and see over the next 3 days or so?
Well, there's a pretty big spectrum of folks.
Right.
And I think it's the younger entrepreneurs, the ones that are first time coming here, that are going to share that idea that we haven't heard about yet.
Okay.
And allowing an opportunity for investors to get around them. So who he or she is, I don't know, because there's some pretty incredible new folks that are coming to the group.
But it could be a potential good investment for a corporate or for you. And for you, Stuart, what are you most excited about?
A guy called Keller Ronaldo, who's the founder of Zipline.
Right?
Yep,
Okay.
Yep. He and I went on a wonderful bike ride about 2 years ago, and he's back in town. I'm looking forward to getting on the bike with him and talking Zipline.
All right, well, thank you for having us here in Bentonville, Northwest Arkansas. Fascinating conversation. Guy, a lot that I'm going to hear about in the next 3 days. I'll keep you updated from the ground.
Yeah, from the ground is kind of the bit that I want to address just for a moment, Ed. Alex started the interview saying you're on the ground. I want to know when you're going to get up in one of these things.
Well, Cyrus has invited me to go up in a stunt plane So I'll send a note to management right now, see if we make that happen.
I'll fly you.
Okay.
And Stuart will fly it, actually, out of interest.
Okay, cool, perfect. There we go. Job done. Ed Ludlow no longer on the ground. Great stuff, guys. Really appreciate it. Thank you very much indeed. Looking forward to hearing so much more about this from Way Group co-founder Stuart Wolson and Up Partners co-founder Sarah Singari. Ed Ludlow, fantastic as ever. Okay, on Wednesday, Ed's going to have an exclusive sit-down with ARK Invest CEO Cathie Wood. I'm sure she's got plenty to say on this subject as well. Coming up, even, we are going to be going to the other end of the cap scale. Apple kicking off its annual developers conference in just over an hour. High expectations for the next generation of operating system. We're going to get that for the new watch. We're going to get that for the iPads. We're going to get that, obviously, for the MacBooks as well. I want to know about the VR headsets. We're going to get the latest from Cupertino next. This is Bloomberg.
Well, U.S. equities pairing some gains here as yields really pick up steam to the upside. Abigail Doolittle is tracking some of those moves. Abigail?
Alex, yeah, the roller coaster ride continues. This is a two-day chart. So this is last Friday when we, of course, had that better than expected payrolls report. And that has the effect of the good news is bad news. Plus, Elon Musk at that time not so positive on the state of the economy. But today it's a different story. We do have gains right now up about 1%. But at one point, the NASDAQ 100 had been up close to 2%. To Alex's point, off the highs. It's going to be very interesting to see how the day closes out. Very low volume. As for two big names, I was just mentioning Elon Musk, of course, today, an amended 13D filing. Elon Musk is saying that he's asking the company for more information around the fake accounts for Twitter, asking and that if they are not able to provide it with him, it could be a breach of the contract. He could terminate that deal. So shares down, but well off the 8% lows. Tesla, on the other hand, up 1.3% on mixed messages around what's ahead for that workforce. As for the driver, the macro driver that Alex was talking about with stocks off the highs, it has much to do with yields going higher over the last 5 days. It's really pretty incredible. You have this big backup here, and right now at 303. So earlier at just 3%, it seemed as though stocks could tolerate that, but now 303, Guy, it seems to be making the difference.
Oh, yeah, it was interesting. Just as it kind of built a little bit of momentum, there was kind of a tipping point, certainly for the stock market. Abigail, great stuff. Thank you very much. Abigail Doolittle on what's happening in the markets. Let's turn to one of the biggest members of the market. That is Apple. A big focus today. It's holding its developers event in person. It's doing so for the first time in years. Now, the tech giant is expected to unveil the latest versions of its operating systems. It's going to have new ones for phones, for the Macs, for the watches, for the tablets, and TVs. What else should we be expecting? Emily Chang, Bloomberg technology anchor, joining us from the event in Cupertino, California, up early. Emily, we really appreciate it. Look, what is your focus today? What are you looking for?
Hey, Guy. Yep, we are back at Apple Park in person for the first time in 3 years. And today is, as always, we're expecting it to be about the software. We could see some new hardware, some clues about new hardware, but we're really focused on software today. For example, we're expecting a big revamp of iPad software that Apple is efforting to make the iPad a lot more like a laptop, to be able to use multiple apps, for example, at the same time. We could also see updates to iPhone software, MacBook software, Watch, Apple TV software. And if we see some new hardware, our colleague Mark Gurman has reported we might see a MacBook Air here today. It could be the biggest revamp in a decade. Of course, there have been some supply chain and manufacturing challenges back in China, so that could have slowed things down. Maybe we'll see a look at the new M2 chip coming from Apple, but really we're focused on the software today, and maybe, just maybe, a glimpse of Apple's vision for augmented and virtual reality.
Well, I was going to say, no headset there for AR, VR?
So I am not expecting to see a headset, but I am hoping for some clues about just how Apple is thinking about AR and VR. Again, as Mark has reported, he believes that Apple's next big thing is going to be this AR, VR headset. But we don't know a lot about how Apple thinks about these new technologies. Of course, we've seen Facebook or Meta's vision with the Meta Quest, and this new headset would compete more directly with Meta. But I think about, for example, think FaceTime in VR or Maps in VR, or Fitness Plus workouts in VR. Maybe we'll see some glimpse of how Apple is envisioning these new technologies.
Oh, maps in VR. That would actually be quite helpful. Emily, thanks a lot. We appreciate it. Thank you for joining us early there. Bloomberg's Emily Chang, and tune into Bloomberg Technology later today for a special report from WWDC. Yes, Wolf, Rebel Girls CEO, will be guest at 5:30 p.m., so definitely join Emily for that. That wraps it up for me and Guy. On television, coming up, Jason Furman, Harvard professor and former chair of the Council of Economic Advisors, will be joining Balance of Power. This is Bloomberg.